Good evening, everybody. Thank you very much for joining today's webinar. The topic for today's webinar is gold a safe haven asset? Hi, I am Chirag Sheth. I am the principal consultant at Metals Focus, one of the world's leading precious metals research and consultancy company. I head South Asia and Southeast Asia for Metals Focus. It's an interesting topic, and we've got a very high-profile panel today. I'm joined by John Levin, Prakash Shah, and Suvankar Sen. John is the head of commodities at the Toronto Dominion Bank, popularly known as TD. He's the head of Asia Pacific. John has had a long career in precious metals, more than 2 decades, working with various global banks like ANZ, HSBC. John has been coming to India since 1991, if I'm not mistaken, and he's very happy about his 40+ stamps on his passport of the Indian immigration. And I'm sure John is very happy with the way the cricket match is going between India and Australia. So welcome, John. Thank you very much for joining us. We've also got my good friend Prakash Shah. Prakash is the director at Deutsche Bank in Singapore. He's joined DB to set up their precious metals desk. Prior to that, Prakash was working with
this.
Yeah.
The second thing was very clearly that a lot of institutional investors who were underinvested in gold as an asset class started looking at it favorably. Third, which was unprecedented, we've never seen something like this, was the pandemic and the way it spread so quickly globally. Very few people would have thought that, back in January, February, when, a small part of the world, which was largely a few cities in China, some countries in Southeast Asia, which were impacted, the spread would, eventually become more global, and how that would impact the asset classes globally, how that made a lot of the central banks in the world loosen up their purses and, literally make interest rate so attractive that most of the risk assets started going higher. So I think, broadly, these 3 things have given a strong tailwind to gold, like most of the other risk assets.
Right. Suvankar, what would you say from an India perspective? What are the 2 or 3 significant changes that you've seen?
So, coming from a consumer point of view, which, I have closely observed that as we began year, April, as a jewelry industry, as a dealer of precious metals and gold, we were all very much apprehensive and scared that how would the consumers behave, and seeing the gold price going up at such a fast rate, would in this whole crisis people come out and try to sell the asset and get some liquidity into the system. But to the I would say that pleasantly surprised is the fact that I think that today's generation, the young generation of the world, the young generation of India, seeing a crisis happening and seeing that how life could take you through various kinds of tests, and the way the metal has performed in such crisis, they have realized, and they have the trust towards the metal as an asset has again kind of renewed, and they realize that yes, in times of need, it comes to help, it performs well, the asset appreciates. And when it came to selling the asset, I think that people in India are emotionally attached to gold. You could call it ancient wisdom, you could call it anything, you could call it a cultural integration with the mind and soul, but people did not sell the asset. They have rather, I would say that when it came to the weddings, people actually, if their budget was whatever, X, Y, Z, and thanks to the savings that have happened from not spending on other of the weddings, which might be more superficial, people have realized that this is a real asset, and rather I would invest my money and buy something which is more real emotions are real, your children are real, your family is real. So might as well put the money on something which is real, and they have bought more gold. So that has kind of helped us and can give us a great realization. So that was something very good.
Right. John, if I can bring you in, Prakash and Suvankar made two interesting points. I think we've seen over the years that metal actually moved from London, New York to probably India or Southeast Asia or China. This is the first time when actually a lot of consumers in Southeast Asia sold their metal and metal moved to New York and to London. Now, how do you see this relationship breaking down? Do you think this is temporary, or do you think this is a new change which has actually come into the market?
First of all, thank you very much for having me. It's a pleasure. I think this has been one of the most remarkable years in my 25-year career as a precious metals dealer and trader, primarily because we saw a genuine supply chain breakdown. And I think that is what created the price dislocation between various markets. Gold is a universal currency, but each market has its own idiosyncrasies. What we saw this year was, I think, the commodity exchange in particular in New York, the price of loco New York, for want of a better word, gold, that is heavily correlated to the price of the London market. And there's a lot of arbitrage trading or spread trading that goes on between those two markets. And they historically trade at just mathematical valuations because they're both tax-free entry points and exit points. So it really should be just the mathematical time decay and cost of freight. But what happened this year is March and April, the supply chain completely broke down because of the pandemic. There was very limited cargo space to move gold. Remember, gold is primarily moved around the world in airplanes, silver on the seas. But gold is moved by airplanes. And when global airline fleets were grounded, that completely grounded the physical gold market. So it was very difficult. So traders in New York had to financially settle these trades rather than physically settle to begin with. And that created a huge distortion in the market. Eventually, I think that this massive move of gold to try and it became a very attractive price in the end to deliver into the exchange. And ultimately, as cargo flights, limited passenger flights started to fly, you started to see gold move to New York to take advantage of that price dislocation. I've never seen a move from east to west like that. The stocks in New York are very visible. You can see it. Everyone can look up COMEX and see what the eligible and held stocks are. There's about 36 million ounces of gold sitting in New York vaults. To give you some context, at the beginning of the year, that might have been less than 3 or 4 million ounces. So there was a huge amount moved. Now, what does it mean going forward? I happen to think that markets always mean revert, and I think we will see a mean reversion of the more historic flows of gold to the traditional markets that consume gold, that is China, Thailand, and India. I think that the pandemic created a lot of uncertainty. People's livelihoods were tested. So gold holds a dual capacity. It's a store of wealth and it gives you confidence, but it's also something that can be fungible, that can be used as collateral for a short-term loan. So one of the things that I've noticed about the Indian market is the growth of the fintech market coupled with the traditional jewelers who are offering these services now through technology. So if I really had to identify one characteristic, it's that technology has actually been good for gold because it makes it more portable, more transferable, and a little more, I think, ubiquitous in its spread. It's more available. All you need is an electronic platform to download these apps that perhaps your local jewelers provide, or the big jewelry chains, or these startup companies that are offering this liquidity in gold. And that ultimately is good for gold because it gives it confidence.
Right. That's interesting. Suvankar, John mentioned about technology, and I wanted to understand from you in terms of how are jewelers now adapting to technology before we again move on to the discussion on what happened in the gold market. But, I just wanted to take your quick view on that.
So,
Given the fact that there was lockdown, a lot of people could not go out, how has jewelers adapted to that?
So as you're all aware that, in the middle of lockdown, we had one of the biggest occasions in our Indian jewelry market called Akshaya Tritiya. And what we saw is that, big jewelers, branded jewelers, or even certain smaller regional players, what they have done is that to cater to the need of the customer, they had started taking advances against, the gold during. So that was one aspect where consumers, out of trust and out of the need and the want to buy gold, they used the electronic platform to make the payments. That was one. Second is that what was not really thought of or believed before, consumers in their want of buying jewelry, they were actually buying jewelry through a video calling happening. So there you could see that yes, there is a consumer sitting in the house, and here from the store, our salespeople are showing the designs, and on a camera the product is looking that much more beautiful because the focus of your brain and your eyes is on one particular design and not getting so much distracted with multiple designs. So at a much shorter period of time, as per the need of the consumer, they are actually getting the confidence and buying the jewelry. So there was that technology adoption. Third was that, like what John was saying, that if you have to, there's so much volatility happening. We had done it on our website, and many brands have done it. That on online, you could just suddenly the gold price has fallen. So the next day you could see the current updated rate, and you could just transfer the money and book your gold at the rate that you want. So that was something that happened, and all sorts of flexible benefits on giving the advances before. If the prices went down, then you would still enjoy the lower price. So all options trading kind of integrated in your marketing and all of that. So consumers were willing to accept all sorts of technology, and jewelers were also adopting very fast to make sure consumers remained attracted towards jewelry gold.
Yeah. Suvankar, could you just adjust your camera? We are not able to see you. That. Yeah, perfect. That's much better. Just a note to everybody, in case there are any questions, please put it out in the question box, and we'll be able to take them up. Suvankar, I wanted to ask you one more point on the technologies itself. You've got stores in cities as well as in a lot of tier 2, tier 3 towns, right? Have you seen adaptation of technology even in the smaller towns, or is it more, I would say, limited to the larger cities?
So technology adoption in smaller towns, thanks to the young generation coming in, and thanks to a little more educated, evolved class. So one thing we need to accept and we need to understand is that, be it large cities or be it small towns, thanks to the internet, everyone has been able to adopt to technology. Yes, and when it comes to the maybe the rural farmer who is not so educated, who's of the age of 40, 45, he might not be that comfortable, but his daughter or his son, who is at the age of 18, 20 or whatever, is very much enabling the father or the mother use technology. So that is how the world is moving towards.
That's an interesting point. Prakash, I know in World Gold Council you had been working quite a lot on the digital side, digital gold, and I think that is something which has kind of picked up during this pandemic. What are your lessons out of digital gold, and do you see digital gold through likes of Paytm, Safe Gold, Augment, Google Pay as the next big Prakash? I think we have lost Prakash. Maybe John, you've been coming to India for quite some time. Do you think that the whole growth of digital gold in India is the next big revolution in the gold market?
I think digital means of purchasing, transferring confidence is a global phenomenon, not just limited to India. I see it in every market, and I'm seeing that the more traditional supply chains of accessing or connecting an end user with a supplier is being transformed by digital. And it's ultimately, I think the point made earlier was spot on. The better or easier the customer experience is, the more likely there is to be engagement and purchasing. So I think jewelers have been very quick to adapt to this changing market. And I think that the digital platforms, whether jewelry is bought as an investment or if there is other forms of investment in gold that can be done via digital means, mobile phone apps, this is a global phenomenon, and there's no reason why that wouldn't happen in India as well. I think gold, I think trust is probably the most important thing. So I think that if the supplier is trusted, then particularly with a high value purchase like jewelry or gold investment coins or bars or anything that has a link to the gold price, it's quite a it's not a cheap investment. So I think having trust in the counterpart that you use, it's no different in the banking market. Trust is inherent in who we choose as counterparts, and trust is inherent whether you're a consumer and the company that you're buying the product from. You must trust the quality, the delivery, the transfer of money. All of these things add up to a better customer experience. And that, I think, the younger generation find it just to be, they find whatever's easier, they will use. And digital access is easy.
Yeah. Suvankar, how do you look at digital gold as a jeweler? As a jeweler, would you look at digital gold as a competition, or would you look at digital gold as something that is going to aid gold jewelry business in the future? How do you look at it? Because this is an interesting one.
So I would look at it as an aid. There's a positive way of looking at it and a negative way. Now, people have this whole concept of saving for buying something finally. No one eats gold. They use gold to an end purpose. And yes, investment is another aspect in which you are buying, and then when the prices go up, you sell, or that in your portfolio, you have gold as an asset. But from a consumption point of view, gold is finally bought over a period of time. You have these monthly installment schemes, which is already running in our country. And finally, after 1 year, 2 years, you buy something for your wife or your daughter. So digital gold will only make it easier, will make it affordable also, because there you won't have any kind of limit, and you could buy as little as whatever you can. And I'm aware of so many people that are buying every day. Every day they buy for like $50-100, and then over a period of time they can to save a lot. And then how you use that gold to buy something to create happiness in your life. So there is an end purpose, and I think it will be great for the industry.
Would you say digital gold has actually brought a new set of customers into the market? Probably somebody which would have not been as part of the gold market. Do you think the 20-year-old or a 30-year-old who probably would have only bought gold when they got married are now looking at gold? Do you think that is happening?
Yes. Is it a question for me,
Chirag? Yeah, Suvankar. Yes, Suvankar.
Yes, it is. See, with the new generation, there are two things that are happening, as John said. One is convenience. So whatever you might call it, they feel a little scared to go to the store, and they might feel a little awed by the whole light and the way it's all decorated. So they would rather sit in their lazy chair and then just feel like buying whenever they want to buy. Things get easy in hand. So it will bring them into the loop, and it is needed for them also that they invest their money in a good asset like gold. Yes.
Right. So I think we've got Prakash back on the line. So Prakash and John, actually this question is to both of y'all. We've seen over the last 10-15 days sharp drop in gold prices, especially on the back of news from AstraZeneca, Pfizer, Moderna. Do you think that, fundamentally things have changed for gold? Has the bull run come to the end? And we'll look at the price forecast later, but I just wanted to know from you, does these news materially change anything for gold? Maybe Prakash, if you go in first, and then John, if you come in. Prakash?
I'm happy to.
Yeah, John, if you could before Prakash.
No problem. I think that the word I was seeking before is convenience. It utterly comes down to convenience. The other point that I wanted to make is that when you're buying jewelry, normally in I would say India, but you're more qualified to opine on that than me, but there is a very clear connection between the price of jewelry and the price of gold. For those who are unaware, when you buy jewelry in the UK or the United States or in my home country of Australia, there's actually not that much connection between the gold price and the jewelry price. It's more of an adornment than an investment. But in other markets, there is a clear connection between the price and the jewelry. So I think it's not just the buying price. You've also got to have confidence that you're going to get a good price when you sell. And I think that has also been the revolution that has come, because the digital buyers or the main street buyers that are buying gold, I think another word I used before was confidence. You want to have confidence that the money you're spending on a gold purchase, whether it's an investment or jewelry or an ETF or some fungible, interchangeable investment that has a clear link to gold, you need to trust the counterpart that you're trading with, and that can be a village and your jeweler. It can be a huge chain of jewelers, or it can be an online platform, or both. But you want to have confidence, you want to have convenience, you want to have trust, and you want to have a real confidence that the person from whom you bought it is just as happy to buy it back from you. That gives you confidence that you are holding something that is liquid and that is convertible into cash, either by selling it or actually pledging it as collateral and taking a short-term loan against that. There has to be confidence that the price you're getting is just as competitive as the selling price.
Yeah. So, John, I wanted to ask you, in last, probably if you look at 1.5 months, since the high, we've seen about more than $100 fall in the gold price, right? Now, if you look at, a lot of people ask me this question, that has the bull run come to an end? Has gold fundamentals completely changed because of the news of vaccine? What is your take? Do you think that fundamentally something has changed for gold, or because prices have rallied by more than 60-70% in last 2 years, this is the first time we are seeing some sort of profit booking coming?
I think there's two main drivers to the gold price. The first driver in the last 6 to 7 months has been a risk premium. And whether it's political risk or uncertainty, gold always is a reflection of confidence and uncertainty. And clearly, the global markets have been very uncertain. And you could argue that a change in the executive office of the United States, there was a lot of uncertainty about US policy and whether the incumbent was going to get another 4 years in office, with all the volatility that brings and uncertainty. So I think there is a degree of calm that has been restored to the market by perhaps a change in US political direction, and also, of course, a little more confidence coming with a vaccine. But that's not to say the world is still not heavily inflicted by these daily infection rates. My heart goes out to everyone that's been affected by that. The second driver of gold has been the policy response by central banks around the world to the slowdown in growth, the shutting down of commerce and trade. I think that trade is still valid because there is going to be, I think, a very inflationary response once the markets do normalize with all this extra stimulus that has been injected into global economies. So I think that idea that inflation may be a consequence of all of this stimulus, but met with very tepid central bank response. The Federal Reserve has openly said that they will not consider inflation to be their primary, to be the fire that needs to be put out initially. They've not even, I think, made any targets on what they want inflation to be. They just want growth and employment. So I think gold historically has, all the correlations to inflation are favorable. And I think that trade probably is still valid. Yes, profit taking on a lower political risk premium, profit taking as portfolios are slightly tweaked from defensive allocations to slightly more aggressive plays into emerging markets, into growth stocks that may come from this confidence that comes back to the stock markets. But that inherent risk of inflation and that portfolio hedge against that, I think, still favors gold. Likewise, remember, looking at gold in US dollars, that should only really concern people in the United States. It always comes down to what the price of gold is in your local currency. And I think that by and large, those bull trends are still largely intact because many currencies around the world have been weakened severely. And there is still uncertainty about whether this incoming administration will favor a strong US dollar policy or a weak US dollar policy.
But, John, and that's an interesting point. You make a couple of things on the how the policy is going to be, because we know that Joe Biden has nominated Janet Yellen, and Janet Yellen theory is about fiscal expansion. So in that sense, where you will see loose monetary policy to continue along with fiscal expansion, do you think that maybe next year, when again new allocations happen, gold would be one of the big beneficiaries?
I don't know. But the appointment of Janet Yellen was two things. One, it is an installment of a very seasoned and trusted monetary policy and fiscal policy person. I think the markets were encouraged that appointment was made, some certainty was given. But at the same time, there was an acknowledgement that when she was Federal Reserve, she was quite dovish, and that can often be seen as favourable to gold. But I can't comment on what's going to happen. But it points to that. But markets are never that easy.
True. Suvankar, let me ask you this thing. How have you seen, on the ground, consumers react to this correction in gold price? Are people coming to shops to buy gold? Is it more jewelry buying? Is it more buying of bars and coins? What's happening on the ground?
So we had Dhanteras just a few days back. And we have seen consumers coming to the stores, and maybe it wasn't a one-day affair, but there was a keen interest of consumers who were active or inactive in the last 6-8 months due to the pandemic and COVID situation. Whatever savings they could have, we could see them having enough and more interest on buying the product of jewelry, I would say. Why? I'm giving here a very different perspective, because there are other people
Sure.
to talk of the other subjects. But for a woman of India, all said and done, there is a lot of emotional liking towards jewelry and gold as an asset. And we as men might think that, oh, the prices are high and low and going up and down and getting, palpitations around it. But for a woman, no matter what, if there is some saving in the house, and if by God's blessings there is not too much of a crisis in the family, there is always an inclination towards buying some form of jewelry and gold. So we could see that happening. They are stuck in the house, so they're looking for a vent, and they thought that let us buy this as a great product. So this is what has happened. As far as bars and coins are concerned, yes, there is an investment oriented thinking. But if I may say that compared to last year and this year, it is not that the figures have changed drastically. The kind of proportions towards jewelry versus bars and coins as an investment has more or less remained the same. And even in online sales, if we see that, buying bars and coins is much easier online rather than going to the store. So, be it selling on Amazon or on our website or Flipkart or whatever are those platforms, it has been almost the same kind of proportions, I would say, as last year. So this is what is happening on the ground level.
Right, right. I don't know if you've got Prakash, on the call. Prakash, are you there?
Yeah, can you hear me?
Yeah, Prakash, much better now. Yes. So, Prakash, I wanted to ask you this thing. While 2020 has been a difficult year for a lot of us, for the Indian gold market is actually a landmark year in that sense. We've had the India Good Delivery, we've had compulsory hallmarking coming in, even the spot exchange, the international spot exchange has been notified. For people who don't know these things, if you could, explain what does it mean for the Indian consumer and the Indian trade?
Yeah, so I think India is, all these things which you mentioned, the standards around the purity, which is, what is called the India Good Delivery list. The importance of a gold spot exchange or a gold international bullion exchange, as they call, which is, I think, a key market infrastructure, and hallmarking. I think these are the stepping stones for India becoming a much more bigger, transparent, standard-setting market globally. So, as most of the people would know that, gold has a certain purity, has a certain fineness, has a certain standard. And those standards are what makes gold very unique. And those standards are being set by the London market. Now, every market domestically has got its own standards, right? So China has got own standards which are, defined by the terms of purity, which is 4/9. India literally takes gold, which is 995 in terms of purity. And so far, we've never had a standard. Now, why standard is important? Because the consumer needs to understand, needs complete transparency, and needs to be aware of what they are buying. Because in India, as we know that there are 20,000 different locations where you will have 25,000 different prices. You will never get one price of gold within 100 meters in India, which is very unlike the London market, which is very unlike most of the Western market. So I think gold, for it to become an asset class, needs to understand that it needs to have a base where all the different prices can then revolve. And I think the good delivery list, which is being adopted by most of the commodity exchanges in India, will bring in a lot of standardization and will also open up the possibility of Indians being aware of what the quality of gold they buy. I think it will resonate a lot of trust in the gold market, and I think it's a key and important differentiator, which we so far have never had. Coming to your second thing about change, I think, again, to come back to the same point, if I were to ask today, what is the price of gold in India? everybody will tell me a different price, right? Somebody will look at MCX, somebody will look at IBJA, somebody will look at one of the gold association. So really, you don't have one price in India, unlike China, where, you can look at the Shanghai Gold Exchange and you can say, well, the price for a kilobar in China is 406 or 410 yuan per gram. And if I want that gold in Shanghai, I just pay the transportation cost and whatever funding cost, and I'll get a price for gold in Shanghai. So I think India requires one price for the wholesale market, and I think the exchange will set that price. Also, it will encourage a lot of global participation to happen in the Indian market. India is the second largest gold consumer in the world, right? We used to be the largest consumer, but back in 2007-8, I think China took over India. Nevertheless, it's a very important physical market. It needs to be integrated with the global market, and for that to happen, I think the exchange plays a very important part.
Right.
Hallmarking, I think it's probably the most important criteria. Just think about it, right? Whatever FMCG product we buy a packet of biscuit. It has you're buying a certain quality which has been approved by the regulator. Gold, in fact, a very high value item, never had any hallmarking requirement. So I guess hallmarking will also ensure that whatever recycled gold comes into the market, the consumer will be able to get the benefit of paying a lower slippage cost, because he's 100% sure that if he's buying a hallmark product, he'll be able to sell the gold pretty quickly, pretty efficiently at the least price slippage. So I think all the three changes are probably one of the most awaited changes in the Indian gold market.
Right. Again, this question is to, actually Suvankar and Prakash. Prakash, you travel to Southeast Asia, and even John, you can come in on this. Both of you have traveled to Southeast Asia. Suvankar, you know the Indian market. We saw in April huge viral images of people standing outside shops in Thailand to sell their gold. And I remember I cover Thailand. I spoke with people in Bangkok, and they said we had to literally shut our shops because we ran out of money. We could just not buy any more gold from consumers. And this was a fear in India. Then when, unlock happens, people will come out and sell their gold, but we've not seen that happening. What is it? Maybe Prakash, if you could start, and then John and Suvankar, you could, maybe quickly give your take on this. Prakash, please.
I think Southeast Asia, as you know, Chirag, right, and you cover Thailand as a market. I think it's after China and India, it's the biggest physical market in Southeast Asia. Yeah. And literally, gold did what gold should do, right? It is an insurance you buy. It is an insurance which you use when your house is on fire. And I guess during the COVID time, when a lot of businesses were shut, people wanted to raise cash. Banks were, I wouldn't say not lending, but the banks didn't have the ability to process loan fast. Gold did what gold did, right? I mean, it's a liquid asset. The ability of bartering gold immediately with Thai baht or with cash demonstrated the fact that gold stands to its virtue of a safe haven asset, irrespective of the price, right? When you need liquidity, I think gold did what it did. So yeah, it was very interesting to know what really happened in Thailand, Cambodia, Vietnam, where you had queues of people wanting to exchange gold for cash when the prices were high, or when just the prices were even when the prices were flat to stable. The ability for people to exchange gold was just heartwarming to understand that investing in gold for long term, you can use that as an asset when you want to raise cash. Right. So my point is that we did see a similar thing in India. I think we've seen the how fast the gold loan business has picked up, right? With the likes of Muthoot and Manappuram, collateralizing gold to raise cash. They have seen the loan book expand by 25-30%. And the fact that, the price of gold has moved higher means that, the loan companies are sitting on that much higher margin of safety. So it has been a product which has worked very well for the lenders. It has been a product which has worked very well for the investor. And I think gold will keep doing that, right? I mean, in times of calamity, gold will come in as a safe haven asset.
Yeah. John, do you want to probably take this up? This amazing difference between how Indians reacted and how people in Southeast Asia reacted.
I think it's a bit of a theme that is developing in this panel. A few key words: confidence, trust, collateral. All these sorts of words, I think, are becoming more and more enshrined in the use of the gold and the gold market. I agree with what Prakash is saying. I think, to your point about why gold is probably traded more in Thailand, I think it might be a cultural thing. It's definitely a free trade zone where the prices in Thailand are closely aligned with the prices in the international market. Markets like China and India, I think, probably adopt a tighter regime of controlling the import and export of gold. So that can lead to dislocations between the domestic price and the international price. But I think Prakash's point is valid, and it's one that I made earlier, and that is that in India in particular, I think that selling gold, there's a bit more, a much stronger cultural attachment to keeping gold.
Yeah.
So if there is a way that you can use that gold to get some short-term finance in times of uncertainty, income uncertainty, which the pandemic has utterly been, then I think the growth of these platforms, these financing companies, the fintech, and the jewelers themselves offering this sort of product, I think it really inspires more gold that it can be used in that way to get short-term financing. You get your gold back when you repay the loan, but at the same time, you do need to sell the gold, that you get a good price for it.
Yeah.
Selling gold is not, getting a good price for gold actually inspires you to buy it.
Yeah.
Because if you can sell it for a good price, it gives you more confidence to buy it because you know that you're going to get a good price, a price that is closely aligned to the market price. But I think selling it is often a last resort. And if there are other alternatives, such as this loan market against that, then I think that ultimately inspires more confidence in gold as something to hold.
Yeah. Suvankar, if you could just quickly give your view, why did Indians not sell? Is it because gold loan companies were there, or do you think especially rural India was much better placed in this pandemic?
So I think that what John and Prakash said, it covered a lot of the points. One is that the gold loan companies did flourish, and because of the fact that consumers selling, it's not that, let us be very clear, if on a normal time we would have 5% of consumers selling on a normal time throughout the year, that 5% has gone up. It had gone up from a 5 to say 8%, 9% kind of a thing, but not the way the queues that we saw in Thailand. However, in the other benefit is the fact that gold loan companies took that. And I remember in one of the situation, I was going through a location where there was a gold loan company, and the kind of people who were there were of the kind of a lower wages, but the middle class and the rural customers, because the agricultural work continued to happen, they were not so much affected by the pandemic. A lot of migrant people went back to the smaller towns and villages, and they were doing farming and whatever savings that they had. So I think that queue that we saw in Thailand was basically taken over by the gold loan companies. And from a jewelry point of view, yes, obviously when you are buying jewelry, you are paying a making charge for it. There is an emotional connection to that. that it is given by your father or your mother or your husband or whatever. So you don't want to sell it off so easily. You know, there is a hope that, chalo, if I'm taking a loan, there will be a time when the crisis is over. I will gather the money and I will give that loan and I will take back my jewelry. So that has worked in the minds of the consumer.
So, Prakash, there is one, couple of questions which have come in with regards to what is ideal asset allocation. And I know at World Gold Council, when you were at World Gold Council, WGC did a lot of work on what is an optimum asset allocation. So for somebody who is in their 20s, 30s, what is an optimal asset allocation, or is there something called as an optimal asset allocation, or does it keep on changing with the changing times?
Well, I mean, I'm not a stickler for any fixed formula, but I would always say that gold tends to perform extremely well on a long-term basis. So having some amount of gold in your portfolio does help. I mean, like any other asset, you will have the short-term volatility, you will have the short-term drawdowns. But I think if you look at the gold on a 20-25-year return basis, I think it's done pretty well. If I'm not wrong, I think it's between 7 to 8% return in INR basis, which is, it's about 10% on INR basis, which probably stacks up better than most of the fixed deposit bond returns. So I think the trick here is that, you got to be patient. You got to have the ability to take the pain or the mark to market when there's a drawdown. But so anyone who is buying a physical gold normally wouldn't look at a mark to market pain. Anyone who is buying gold through a sovereign gold bond, I think it's a fantastic product. One should look at that objectively. And yes, if you're buying jewellery as an investment, that also is a fantastic avenue of parking your money. But yeah, never. I mean, I wouldn't say anything less than. Between 5 to 10% looks to be good enough to just ensure that you can weather down any other asset drawdowns also. But yeah, I mean, to each his own. I wouldn't point a number to it, but whatever you do, stick on a long-term basis. I think gold will do fantastically well.
John, there is a question which you could take. The question is that we've seen a correction in gold prices since the highs that it touched in 2017, dollar. And it's always said that, gold has got a correlation with dollar index. It's got a correlation with, some of the other asset classes. We've seen dollar index also falling, gold also falling. So what should one do? Should one use this opportunity to buy gold, or should you buy silver? Because silver has also kind of underperformed in last 1 month or so. So what would you suggest somebody?
Well, I'm not going to make any recommendations because I always tend to be wrong. So I think the decision to buy or sell anything has to do with what your objectives are, what your timing is, whether you're using leverage or whether you are using just your own money and not borrowed money. So all these, it's just a different decision based on what your objectives are. So, but all I do know is that when you buy something expecting a short-term gain, that's probably not the appropriate reason to buy anything, because that you're trying to pick a racehorse in a very crowded field. And so I think what I touched on earlier is what are going to be the drivers for ultimately structural changes in the gold price, fundamental changes in demand, fundamental changes in supply. Clearly, the biggest demand driver in gold is investment demand. That is what we call, that is at the margin. That is going to move it up or down, because the other more traditional demand and supply doesn't really change that much year on year. But the big change is what the investment approach is towards gold. And I think 2019 to 2020 has really the most visible demonstration of investment attitude towards gold is in the global ETF holdings. The publicly traded ETF stocks across all stock exchanges across the world. That buying tends to be less emotional. I think this panel has very clearly demonstrated that jewellery is an emotional purchase along with a rational purchase. You're buying gold, but you're also buying jewellery, and buying jewellery is an emotional purchase. So I think that, no, I'm not here to give recommendations. I'm here to recommend that people just think about what their objectives are, what time horizon they're looking at. All I can say is, over the long term, the Indian general public have been the most successful investors in gold. The wealth effect of individual citizens of India with their gold, that has been one of the greatest trades of all time, because their time horizon is longer term. And I don't see any reason why that longer term view towards gold can be fundamentally changed, not with the fiscal and monetary policy response that we're seeing at the moment.
I want to quickly tiptoe into silver. And Suvankar, this question is to you. We've seen an absolute collapse of silver jewelry and silverware demand. Very surprising, given the fact that rural economy is doing so well. And and I was speaking with you, a couple of days ago. I was just looking at silver import numbers, and one of my colleagues in London thought that he was looking at gold import numbers. About 10 tons, 20 tons. Usually, silver imports is 500, 600 tons a month. Are you surprised with an absolute collapse of the silver market in India? Because look, last 5-7 years we've been on an average consuming 5,000, 6,000 tons of silver. And here, our imports is less than 500 tons in first 10 months, actually.
So if you ask me again, silver being sold from the jewelry stores is either silver utensils or, silver gifts, small gifts, or silver jewelry. So it has been happening. And if I see from the end consumer point of view, yes, April, May, lockdown, no one bothered of buying silver. June, July, August, September, people were more keen to buy things for the bridal season and the need in the house. And out there, whatever little silver was needed was bought. But the industrial use of silver, if you say, due to the manufacturing slowdown and shutdown, that wouldn't really, that would be a great impact on the fact that silver imports have come down drastically. And from an end consumer point of view, year on last year, say a year ago, was around 40 rupees a gram approximately. This year it's close to 60 plus rupees a gram. So silver has performed also phenomenally well, and it is much more affordable compared to gold. It's called the poor man's gold. So I think that it's time that the Indian consumer will soon realize the beauty of silver also, once the markets open up.
John, are you surprised with the absolute collapse of silver imports in India? Do you think, is it because we imported too much of silver over the last 6-7 years and now we are sitting on so much of stock? What is the sense you are getting when you speak with your counterparts in India?
The sense I get is that it's taken a pause. I don't think there's any universal consensus that this is something dramatically structural in terms of its scope or its long-term impact. My humble experience with the Indian market is that the silver purchases by Indian dealers tends to be very concentrated in short bursts of real magnitude. So I don't tend to pay attention to the short-term changes in Indian demand because I know that the very next day it could completely change. So I'm not that concerned yet. I think that's a very valid point about the industrial demand for silver. I think that as economies recover, which they will, there's no reason, when you look at markets like copper, nickel, aluminium, these markets are all benefiting from a restoration of confidence that economic activity will pick up again. So silver wears two hats. It's both a precious metal and an industrial metal, and it plays to both crowds. So I think right now people are a little bit confused about what silver is. Is it a precious metal? Is it industrial metal? And I think that I'm not reading too much into short-term changes in Indian demand, because I've just seen too often in my career that can change very radically and very quickly.
Right. Suvankar, there is a question. We've have gold hallmarking, but silver, where large section of silver is consumed in rural India, where we know that there are purity issues which are there. Why is it that government is not looking at silver hallmarking?
I think that the consumption, that the value of the consumption is lower, so government has not really realized that it needs to be done. We as an organized player, we are trying to hallmark our silver utensils, which is possible, and products going towards the journey. But since the value is so low, like look at it, 1 gram of gold 5,000 rupees, 1 gram of silver is like 160 rupees. So it's like 100th or whatever it is. So to the eyes of the government, it's not come yet. But I guess once hallmarking of gold gets going and it gets implemented across the country, which is going to be more critical, then I think the next step will be to get silver hallmarking done. It is also needed.
Right. Suvankar, one very quick question, and if you could just answer it, maybe in short, brief. There was one, expectation that with weddings becoming much smaller, 50, 60, 100 people, and in Indian weddings tend to be, a much grand affair in that sense. It will benefit gold. People will buy more gold jewelry because I'm now spending less on clothes, or I'm now spending less on hall or food. Has that started happening? Are you seeing some sort of benefit in terms of jewelry sales?
It's not that it has started happening, it has been happening. The fact that in June, July, August, September, consumers were buying, it was led and driven more by wedding jewelry, and we could see a much higher quantity and value and volume for jewelry for weddings, and that is what it is. It is the reality. Yeah. People will wear the best of products, and they'll take a picture and then put it on Instagram for the world to see. So they know that now no point in feeding your guests, but rather buy gold for your family.
Okay. So gentlemen, I'm going to kind of ask you if you could give your price target for next year. John, if you are allowed to do that as per the regulations in a bank, what is your price target for 2021 for gold and silver?
It's not that I don't want to, it's just that I'm invariably wrong on these things. So I'm just what I can say is that our shop, the Toronto Dominion Bank, has maintained its bullish outlook for gold based on the macroeconomic drivers that we ultimately see benefit the market. But our view is very much based on investors that are looking at longer term horizons, and that it's part of a bigger portfolio allocation that include a variety of stocks or real estate. So in that sense, gold as an absolute return is one thing, but its relative return to the other parts of your wealth as an individual, as an institution, as a central bank, that it's all basically the same decision, whether you're an individual like us, or whether you're a sovereign institution. you're basically thinking, what is the right mix of assets to have? And our view is that gold should very much continue to be in the mix.
Right. Prakash, what about you? What is the view at Deutsche Bank on gold and silver for next year?
I think we came out with the research which we came out with the research, I think, about a week or maybe 2 weeks ago, which did put out that, we'll probably see gold lower before we see gold higher. So in terms of where we are today, I think we expect gold to still go lower and then, look at a 2000 handle sometime during the next year. But for the moment, I think it's lower before higher.
Right. Suvankar?
So, my input and my advice to everyone would be that it's going to be volatile. Let us all accept and agree to that. It will not be a one run. And taking to what Prakash said, that whether it will go lower or higher before what, the point is, if you are a consumer or an investor, you should buy at each and every level. Because don't think for 1 year, and that's John has put it so well. Don't think 1 year, 2 year, think at a 4 or 5 year horizon. And if you buy at a price and it goes lower, and if you have the funds, then buy again. So don't buy all at one go, buy at various levels and then keep it for 4 or 5 years. I think that's my advice to all.
Oh, absolutely. I agree with all of y'all. If you look at it, the fundamental scenario still remains fairly supportive for gold, and this is our metals focus point of view. Fundamental remains fairly supportive while we've got the news of vaccine, which has come in over the last couple of weeks' time. It doesn't materially change the, I would say, the macroeconomic landscape. It would take some time before the economy to start recovering. We'll continue to have loose monetary policy. Probably we'll see fiscal expansion happening in January and February once the new administration takes in. So obviously gold and silver prices are likely to remain higher. We are looking at about $20 to $100 for gold next year and about $32 to $33 for silver. And I completely agree with you, Suvankar, that one should not look at it from a short-term perspective. With my 15-year career, I've realized one thing, that gold is a fantastic investment if you hold it for long term. And I would like to close by saying what JP Morgan said many years ago. He said, gold is money, rest everything is credit. Thank you very much, gentlemen, for your views. It was indeed a fantastic discussion, and thank you to the CFA Society.
May I just add one last thing?
Please, John.
I am a very proud Australian cricket fan. And, I'm sorry that Australia beat India in the first one-day international, but there are many games ahead and a long test series. So may it be a well-fought contest, but
indeed.
But I won't be disappointed if Australia does get up on this one. You guys have had too many wins lately.
Indeed, John. Looking forward to it. Thank you very much, everybody. Thank you very much.
Thank you,
Have a good day.